The objectives are the achievement. We can say they are the goals that we want to go ahead and achieve. The goals that we want to go ahead and achieve, objectives in auditing, are categorized into two categories. We say they are those that are primary and there are those that are secondary. Another name for primary is what we call statutory. And another name for secondary is what we call non-statutory. This one, you can also refer to them as incidental objectives. We say they are a by the way objective. They are not the main objective. This one, if you wish, you can call them the core or the core objectives. The core objectives of an audit, I can also derive it from the definition. We say they are derived from the act, to be specific, the Companies Act. If you go to the duties of an auditor in the Companies Act, you will be able to find that one of the duty is to write a report on financial statement and express an opinion on those financial statements. To write a report on financial statement and express an opinion on those financial statements. And that is where we derive the first objective of an audit, that your main work is to write a report concerning the company's financial statement and then tell us something about those financial statements. Then number two objective, which is also derived from the Companies Act, is to state the following matters in the report. To state the following matters in the report. To state what? One of the matters that you're supposed to state is, one, whether you have received all information and explanation, whether auditors have received all information and explanation that they thought was necessary, and explanation deemed necessary in forming an opinion. If you go to a company, the first thing that you do is to gather evidence. The evidence you gather, we call it information and explanation. So you have to tell us, when you went to that company, did you receive that information that you thought it was necessary? If you did, then that is going to be one of the objectives in auditing. The other objective that we need you to tell us is whether proper books of accounts have been kept. Proper books of accounts have been kept. So each and every company has an obligation to maintain books of accounts. Those books of accounts examples will include receipts and payment. So it is the work of an auditor to go ahead and tell us, does this company maintain the good books of account that are required by the Companies Act? The auditor has also stated whether the accounts, those are books of accounts, are in agreement with financial statements. In agreement with financial statements. Because books of accounts are prepared separately from financial statement, the information in the books of accounts is supposed to be consistent with the information in the what? In the financial statement. Lastly, we expect you as an accountant or an auditor to go ahead and tell us whether sound accounting policies have been used. Sound accounting policies have been used. Sound accounting policies have been used in preparation of the financial statement. Have been used. So for me, the Companies Act only provides two objectives in auditing. One is to write a report on financial statement and express an opinion on those financial statements. Item number two is to state whether the auditors have received all information and explanation, whether proper books of accounts have been kept, whether accounts are in agreement with financial statement, whether sound accounting policies have been used in preparation of the financial statement. These two objectives forms the primary or statutory or the core objectives of an audit. As you can see, none of these one has the detection and prevention of errors and frauds, as so many people will go ahead and maybe perceive. So we come to this side here and we say these are secondary objectives. These are not statutory. In most cases, you say they are provided by the professional body or they come as a by the way. When you're auditing the financial statement and you come across a misstatement, it is good to go ahead and report about that misstatement. So here we say one is to prevent and to detect errors and frauds, errors and frauds on a timely basis. What we are referring by the word timely basis is that we don't expect you to discover a fraud 10 years later. It won't help us. The fraud has been committed. So can you be able to discover or to detect a fraud as early as possible so that we can be able to go ahead and reduce the costly or the heavy losses that the company is going to encounter or to incur? If that is not the case, we can go ahead and say to advise the management of the company on internal control system weaknesses. So we are coming to the topic internal control system. I'm going to discuss weaknesses in the internal control system, but the auditor's advice mostly comes in form of a letter called management letter, and that letter is supposed to advise the management on the what? Internal control system. So basically, for me, objectives of an audit is 4 types, or it contains four clauses for all 4 elements. We have to write a report on financial statement and to state these matters in financial statement, to prevent and detect errors and frauds on a timely basis, and to advise the management on the internal control system. That forms the objectives. So those are called secondary. No, they are called statutory. These one are called non-statutory. So it means if you don't maybe fulfill that particular obligation of writing a report, that will amount to a criminal offense, and you're likely to be charged perhaps in a court of law for failure to obey or maybe to meet a statutory requirement.